Oh, good afternoon, everyone, and welcome to Barchart's exclusive live stream webinar with ClipperData. My name is Colleen Sheeren. I'm the head of marketing here at Barchart, and I'm excited to be moderating today's session. I am also joined by Olivia Liu, who is the senior analyst and product manager for agriculture at ClipperData, as well as Matt Smith, who is the director of commodity research. So yeah, first off, thank you both for being here today. I'm very excited to lead this discussion and give attendees more insight into ClipperData and your various solutions for global cargo data and trade patterns. So thank you. So before we get started with introductions from Olivia and Matt, I'd like to just take a few minutes to talk about our commodity pricing network, or CPN for short, which we launched in 2019. And basically since then, we've partnered with various providers of commodity pricing and data across the agricultural markets, as well as energy markets, and a few others that you could see here on the screen, including like food and beverage, freight markets. So ClipperData was recently added as a member of our commodity pricing network earlier this year, which basically means we've integrated their data into our own products and services. This includes Commodity View, which is our leading commodity trading and analytics platform. And we're also able to give users the ability to access ClipperData pricing through a Barchart API or a larger enterprise solution. So today, we'll be discussing the various data sets that ClipperData offers through our commodity pricing network, such as the ones you see here on the screen. Here's a clip of their global cargo data for corn. But yeah, before we dive into the data a bit more, I'd like to give Olivia and Matt the chance to introduce themselves and give more insight into their different backgrounds. So yeah, Olivia, I will hand it over to you first.
Thanks, Colleen. I'm very happy to be here. And I joined ClipperData starting beginning of 2020, so it hasn't been very long. And I had the agriculture desk. I am a senior analyst here, and I'm also the product manager. And before that, I worked 9 years in Bunge in their White Plains office. I oversee market research. So yeah, that's about me. Thanks.
Matt, kick it off over to you.
Sure. Hi, I'm Matt Smith. I'm Director of Commodity Research at ClipperData. I've been with Clipper for about 5.5 years now, and I manage a team of analysts covering various different commodities. So we have Olivia that's heading the charge in terms of the ag side of things, and then we're covering LNG, LPG, crude, and products as well. So that's essentially what I do. I help keep the team kind of chugging along.
Well, thanks again to you both for joining. It's interesting to hear about the different backgrounds you both bring to the table. So yeah, next, I'd like to launch a poll to attendees for you guys to all answer. Let me launch that here. We'd like to see how many of you are currently following global cargo patterns for grain. So I'll leave that up for a minute or two. And while you're answering that, Matt, can you just dive a bit more into the background of ClipperData and how the firm got started?
Yes, absolutely. So ClipperData started in late 2012, and kind of the kernel of the idea was essentially that there wasn't really a granular focus on what was coming into the US in terms of crude and products. And so that was where we started off really with that focus, incorporating proprietary data along with AIS, which is satellite tracking of vessels, to essentially compound that information to make it extremely valuable. So we started off just in the US, but then we've expanded since then on a global basis, and not just for oil, but for other commodities as well. So we've moved into tracking global flows of gasoline and distillates, middle distillates, which is diesel and jet fuel, as well as LPG, LNG, and now with Olivia with the ag side of things as well. And so the key differentiator with our data is that focus on the hard data, that proprietary information. So we have the relationship in the US where we're getting that information in overnight. We have an exclusive arrangement, and then we have on a global basis different tie-ups with port agents, and so we're collecting the information on what is actually on the vessel. So that is crucial. So we're able to identify what type of crude is on board, or in terms of the product side, we know if it's jet fuel or whether it's gasoline or whether it's diesel. And so that's extremely valuable information. And so when we first started, we thought it was going to be a fairly small universe of clients that we would have. But it turns out we've really expanded, and as we've grown, so has our kind of the focus for our clients. And so we have hedge funds and financial players who buy our data and our research. And then we also have refiners, producers, national oil companies, people that are perhaps making planning to change a port or make an investment somewhere. So there's a real variety of different clients that are using our information. Some are doing it to trade physical cargoes of products. Others are doing it simply as a financial play to make a bet on the price of oil. But really, we're finding that we have a really wide variety of clients, and so we're expanding the commodities to expand those clients as well.
And thanks to everyone who went ahead and answered that poll. We'll come back to that in a few minutes. I'd like to move over to Olivia. Olivia, ClipperData is currently contributing cargo data and trade patterns across the grain and oilseed markets through our CPN. Can you talk more specifically about that data as well as what you offer outside of data?
Sure. So as Matt has mentioned, there are really a multitude of inputs that go into our algorithms. There are the AIS signals, both terrestrial and waterborne, and we have 5 years of daily data and point-in-time data. We have granular port mappings, we have fixture data, bill of ladings, and port agent data that we collect globally. And we also utilize public information such as USDA grains inspections data that are published weekly. And all these get processed to generate our daily published data and also get fed into our machine learning models to produce offtake forecasts. And one of the strong features of our grains and oilseeds loadings data is that through these time series data, the clients can really obtain some trading house level insights into the agricultural commodities market. And that's really what we are trying to do here. And our data typically features real-time loadings trends, and they convey any trade policy shifts and ultimately enable people to build their own supply and demand balances. So as you might know, export and import demand is really at the core that we are offering. And it's compared against government forecasts and customs. And they're organized by daily volumes, weekly, and by country, by grade. And it allows the clients to easily identify any anomalies. And the causes of any type of anomaly could be wide-ranging, and they could be animal disease, they could be weather disruptions or trade restrictions imposed by governments. And outside of the data itself, we also offer multiple reports where we draw on this data, our own perspectives on the market, as well as any price biases. And some of the main ones include the daily voyage reports, and I'll show some examples of this during the case study section. We also have the weekly global research reports on grains and oilseeds. And the other things that we offer include the map. So in addition to the aggregate data that we just spoke about, our real-time and precision vessel tracking allows physical traders to track specific vessels. And it really helps to inform the traders on where to position their vessels. The volumes and movement out of specific regions also have impact on exchanges. And this would enable destination traders to see any gaps in supply and demand, which would help them understand the short-term surplus and deficit for the physical commodity. So CLive is our primary visualization tool, and we'll also show example of that during the case study session. Basically, it enables us to see the vessel movements as well as facilities that Matt has mentioned. And you can also create your own plots by geography and grade any way you want. We also have tools that allow us to easily access the data. In addition to the CSV files, we have the API tool that allow programs such as Python, R, and Excel add-ons. And we've spoken so much about what we offer, and you might wonder how good is our coverage. So I wanted to touch briefly on the coverage of our grains and oilseeds data. We constantly monitor the soundness of our data by comparing them against the officials out there. And we have these data going back to 2017. So we cover up to 98% of the USDA inspected bulk vessel loadings. So that includes soybeans, corn, wheat, and sorghum. We also cover non-USDA inspected loadings out of the US, such as DDGs and soybean meal exports via bulk and containers. We also cover non-dry bulks, but that are agriculture related, such as ethanol, corn oil, and soybean oil exports by tankers. Outside of the US, we cover around 95% to 100% of the Black Sea loadings that are waterborne. We also do quite a good job in South America and in Australia and Canada. We cover 95% of the Brazil loadings and Argentine loadings that are dry bulk related. We cover Brazil ethanol. We also cover a very decent amount of Australian and Canadian grains. And in addition to grains and soybeans, we also cover other grains such as sorghum and barley, as well as soft seeds such as canola and sunflower seeds. We also cover outside of grains and oilseeds in the dry bulk space, coal and iron ore as well. Back to you, Colleen.
That really great overview on the data that you offer, as well as the services that you offer outside of data. So it's very interesting. I'd like to go back now to the poll we took a few minutes ago. So looking at the responses, it looks like just under half of the audience is currently following global cargo patterns for grain. So Matt, do you expect the demand for this data to increase over the coming years?
Yes, absolutely. So it's something that we've seen in the previous commodities that we've started tracking. You know, the more attention and more focus that you bring onto it, the greater transparency it brings to the market. And so we expect, the more that we push the vessel tracking side of things, the tracking of these commodities, the more that there will be interest for them. It really does give you that added insight, and to the point where if you don't have it, you're ultimately at a disadvantage not being able to see it. So we really do think it's going to be a game changer as we move forward here. Yeah.
Olivia, I don't know if you just want to briefly touch on this, but would you also agree that demand for this data has been increasing for some time? Like looking at years past up until today, has the market really evolved a lot?
Oh, definitely. The industry has definitely become a more integrated space. 10, 20 years ago, the commercials really dominate the information flow. So by commercials, I mean companies like the ABCDs in the grains and oilseed space, such as Bunge that I previously worked for. But nowadays, companies like us really help to make the industry a more transparent place. So farmers, farm associations, NGOs, they can all feel the pulses of the market that affect their day-to-day business decisions and strategic plans. So with the turn of 2020 and with the commodity boom that we are currently in, we've also seen a surge in the number of algorithmic traders and hedge funds that utilize our data. And our data really help them develop trading strategies, and our analysts help point them to the fundamentals that drive the markets.
Obviously, data for these markets have evolved a lot over the years, and I'm sure based on what Matt said, the future presents the same kind of outlook. I'm sure many new technologies and services will evolve and be innovated from companies such as ClipperData as well as Barchart. So it'll definitely be interesting to see where the market for this kind of data is 5, 10, 20 years from now. So moving on, as we mentioned before, through the commodity pricing network, ClipperData is currently contributing cargo data and global trade patterns across the grain and oilseed markets. Olivia, I think it'd be great if we could dive more now into the different users for this data, you know, who they might look like, as well as the different ways they can use the data. And I know you have some slides for this, so I will put that up now. Feel free to just let me know when you'd like for me to go to the next slide.
Sure, thanks, Colleen. So ClipperData collects and publishes cargo level data on the flow of traded commodities, including dry bulk and grains. And its grain client base really includes commodity traders, and this includes both physical commodities and futures traders. And we also have clients such as the brokerage and the banks, and they have broad reach of clients, and they use our data to generate charts and reports for the benefit of their own clients. We have farmer associations that I mentioned about, and they read our reports to gain access to high-level global trends and movements, both on the supply and demand. And there are also the government agencies and the NPOs, and these are agriculture agencies, primarily US-based, and they use our data as cross-checks and of their own information, and they use them to promote trade. And the last is the hedge funds and algorithmic traders that I mentioned about, that are sort of the new space here. And in our experience, the algorithmic traders spend a lot of time and effort understanding how the data is used in traditional quantitative models outside of just the algorithmic trading alone. And some analysts have also started using our data directly in their models for algorithmic trading. And they always appreciate our analyst input on how the fundamentals are being used to move the market as well. So we can maybe move on to the next slide. So this is kind of an example of how our data help inform the supply and demand. So for agriculture commodities analysts, it's really important to understand supply and demand by building balance sheets. And that's really something that really moves the underlying prices of the commodities. And since waterborne commodity flow is the largest component of commodity demand from the perspective of origination countries, where price discovery is most pronounced, the agriculture commodity analysts do use ClipperData as an input into their models. So we cover corn, wheat, soybean meal, which are the grains with the largest open interests on the exchanges. And we also cover small grains such as barley and sorghum, as well as soft seeds such as canola and sunflower, as I have mentioned. And I'm providing a specific example here. And these charts illustrate an example of how supply and demand is used last year. And the left chart is Brazil soybean loadings with 3 years of history, and the right chart is CBOT soybean prices with 3 years of history, both displayed on a crop year basis. So clearly, Brazil had exported above normal beans in the April-June period of 2020, and that has really demonstrated bigger than normal origin production, as well as the weaker real that had really incentivized Brazilian farmers to sell more beans than normal, which is very bearish in terms of how its impact on the CBOT market. And you can see that's exactly what happened with the prices during that period. This is a second example that I wanted to illustrate to you how our data can be used to imply price movements. So stronger corn loadings actually corresponded with higher prices in this case. This is because the corn crop size for 2021 is limited. So the stronger exports actually imply a tighter carryout in the case of corn. Then this is an imbalance that helped drive the prices higher. So understanding what drives these loadings is actually key in understanding how they interact with prices. So in addition to deriving the supply and demand balance sheets using our data, another use of our grains data is that some macro traders use our data as a guidance for macroeconomic indicators. So not for a specific grade, such as corn or beans, but for the aggregate of commodity flow time series. They really signal movement on foreign exchange rates or equities in some cases. And on the right-hand side is an example. As you can see, the US dollar is typically inversely related to the agriculture index. And the agriculture index is driven, in a by and large by our loadings and also supply and demand. So this is an example of the C-Live plots that I had mentioned that is unique to our platform. So on the right-hand side, this is really a chart that demonstrates Chinese soybean imports, which many of you know is a strong feature of the market in 2020. And these plots are 100% customizable, so you can really slice and dice the data you want and plot the most relevant charts that you want to see. So, as I mentioned, our data not only help the market know about loadings, but also the offtakes. So Chinese imports really soared in 2020 with the phase 1 deal with the US and also the recovering demand from the African swine fever that had hit China in 2018 and 2019. So destination traders can really utilize this and see how the offtakes have increased. So in terms of China, we actually track more than 90% of the Chinese imports. And this includes not only soybeans, but also feed grains such as corn, sorghum, and also wheat. And in addition, we also track very closely coal and iron ore imports as well, which is a very important macroeconomic indicator as well for China. So this is an example of how our data help clients know about any abnormal flows, which are a big driver of the markets, not only in energy, but also in grains and oilseeds. So for example, here on the right-hand side, you can see that how our data have tracked Bangladesh wheat offtake from India in the 2021 crop year. So Bangladesh typically imports from countries like Russia and Canada, but this year they have started shifting some of their purchases from to India, and that's really because global supplies have really tightened outside of the at the major origins. So you have very strong global demand because of COVID. Destination governments are trying to procure as much as they could to stabilize their domestic prices, but that at the same time were hit with a very tight supply situation at the origins, such as the EU. So you have this sort of tight global balance that had led to the shifts in some of the flows. So India, which is traditionally not a wheat exporter, had started to export more this year to countries such as Bangladesh. So this is an example of the export pace tracker that is also generated by our data, and it's used to gain understanding of the crop year-to-date loadings and how it's related to the USDA WASDE reports. The WASDE report typically adjusts the export estimates for the crop year based on two things. First is actual loadings to date, And the second is anticipated demand reaction to prices. So our tracking lends a lot of insight into the first case. So as an example, you can see that our tracker actually indicated slower than normal pace of Argentine corn exports, and that actually got reflected by the USDA in their WASDE report in January, where they had reduced Argentine corn exports by 1.5 million metric tons. So this is another example that showcases our forecasting capability. So we not only just track vessels that have left the ports and have been discharged at the destinations, but we also try to do some forecasting work here. So we forecast the weekly inspections of the U.S. soybean, corn, and wheat loadings based on our tracking of the domestic vessels, and as well as we do some machine learning on the historical patterns as well. So this forecasting really enables traders to actively place bets ahead of the report release, which has been one of the many market movers. We also not only do this for grains and oilseeds, but we also do extensively forecasting of U.S. Crude exports, and we also try to anticipate the EIA reports, for example. So this goes a long way into our forecasting capabilities.
Olivia, for that great overview on the different use cases of the data. If anyone has questions regarding any of those use cases, feel free to send those in using the panel on the right-hand side of your screen, and we will go through those at the end of the presentation. So I thought it would be interesting to kind of switch gears a little bit and talk about the markets. So Matt, I know you have a background in energy, which is a large sector that ClipperData serves. I thought it'd be good if you could just take a few minutes and touch on, what you're seeing in the market right now for energy.
Yeah, sure, and I'll keep it brief. But I think particularly just for this week, what is crazy is what is happening in terms of Texas and what we're seeing there. And so our opinion generally has been that we would see constructive markets here for oil prices as we move through the first half of the year, because we expected US oil inventories to drop. But I think that's kind of being exacerbated by what we're seeing at the moment. So not only are we seeing, 4 million barrels a day of production being taken offline, we're also seeing refinery runs being absolutely walloped as well. So that's really near-term shaking up the market. But it's supportive both for oil prices and for the product prices, simply because we've seen so much of that supply being taken offline for those two. So from a US perspective, we were expecting it to be fairly constructive anyway. But then our second element is more related to the global state of the markets, and that's through OPEC. And so we've seen Saudi Arabia, and say they were going to take 1 million barrels a day of production offline in February and in March. We can see in our data that they really cut back on exports to the global market in January. They've come back a little bit in February, but we're expecting them to dial back a little bit again. And so that again is also helping to drain the oversupply we've seen over the last year, as it has essentially developed because of the coronavirus and all the demand side impact we've seen from that. And so, and then just touching on the demand side of things, China throughout this situation over the last year, which has been so unprecedented, when prices dropped so low, they pulled in so much crude and they've used that to stockpile. But also Asia generally has been able to deal and come out of the coronavirus pandemic much better than the rest of the world from a demand perspective. And so we're already seeing demand back to year-ago levels in, say, sort of India. In Europe, we're still seeing them going through the throes of lockdown. We see really low crude imports going in there because their refineries just don't need to be refining because nobody's really being able to drive so much. And then the US is still lagging in terms of the gasoline side of the picture by 10% year on year, but we should see that recovery coming through. So that's really it. To kind of sum it up, I suppose we're fairly positive or optimistic on oil prices and gasoline prices, simply because of the recovery in demand we're going to be seeing coming forward.
And Olivia, same for you. You know, you have a very strong background in ag and grain, which is a large user base for Barchart. Can you talk a few minutes and just let us know what you're seeing in the grain markets right now?
Sure, Colleen. So I'm sure everyone has heard about how bullish the oilseeds and grains market have been starting mid-2020 and into this year. And there are a lot of reasons from both demand and supply sides that help contribute to this. So for one, you had the Chinese livestock industry that has been recovering rapidly from the African swine fever. And this, coupled with weaker real, has really led to Brazil push out beans at an unprecedented pace last year, as we've touched base on before, which has also laid the foundation of the supply shortage later in the season. And there are some geopolitics that had a play as well. So you've got Argentina, which saw an increase in export tax early in 2020, that really helped cripple their soybean crush industry. And later in the year, there were the strikes from the farmer unions that threatened the port loadings out of Argentina. So the wheat harvest in Argentina was also poor this year. And beginning in 2021, there was this cap on daily corn exports that really have kept the Argentine exporters on their toes as well. And US production for bean and corn for the 2021 crop year took a downturn in October and November and even January as the USDA started to incorporate the harvest results in. And this coincided with the boom in Chinese buying of the US beans and corn. And what happened was, as we all know, the bean and corn ending stocks rapidly tightened at major origins, and they really helped push CBOT prices to new highs. In the case of corn, it is trading at the highest since 2013. Looking ahead, the supply and demand factors will continue to send mixed signals to the market, but overall they remain bullish given how tight the carryout for 2021 is. You have a massive South American crop that's hitting the market right now, as South American beans is currently being harvested in Brazil. But in the short run, there are a lot of technicalities that the market needs to sort out because the harvest in Brazil is delayed, and the logistics continue to present challenges in both Brazil and Argentina. Beans and corn are also competing fiercely for the US grain acreage, which will get more direction and guidance in the USDA Outlook conference that's going to take place tomorrow and the day after. And food security continues to be a front runner in the concerns of the market. A lot of countries around the world are taking measures to curb inflation by removing import tariffs to encourage demand in the case of destinations, or restricting exports in the case of origins, such as the Russian government, which had been levying tax on wheat exports. And in both cases, they had led to a rally in the prices that we've seen on the exchanges. So you've got very strong feed wheat demand in China and milling wheat demand elsewhere in the world because of the government stockpiling to deal with the COVID situation. So all of this has led to a tight fundamental situation, as we kept emphasizing. And even though right now Northern Hemisphere is faced with a relatively benign winter weather, such as in Europe and Black Sea, which are conducive for winter wheat development, as well as in the US, which is positive for the spring plantings. Anything could still go wrong from here, and would definitely send the market into another rally. And as we speak now, we actually just had a freeze that's going on for the winter wheat in a lot of parts of the plains in the US. and the damage to the winter wheat could actually take some time to be assessed, even though the market at the moment isn't so worried about it because of the snow cover.
Yeah. So I'd now like to kick off a Q&A. So if you have a question for Matt or Olivia and you haven't sent that over yet, feel free to do that now by using the panel on the right-hand side of your screen. It looks like we do have one right now for Matt. So Matt, could you just talk a little bit more about what lies ahead for ClipperData over the next year?
Yeah, sure. So there's really a focus on three things, I suppose. So the first is on the data side of things. So just talking broadly as a company, as opposed to not just on the ag side of things, but we're very much focused on that hard data piece, on the proprietary data. So really getting as much into or overlaid with the data as possible, so we can, really provide that added value there and those insights that you can't find anywhere else. So that's the first thing. The second thing is something that Olivia's already touched on, is in terms of the visualization. So in the last year, we've done a lot in terms of CLive with the mapping function, and also with charting and dashboarding our data. So being able to visualize it better and identify trends. So that's the second thing. And the third thing really, I guess, is something that we're seeing that we're doing with Barchart here, and we're doing with other providers as well in the energy sector, which is doing these joint ventures, which essentially help to compound or visualize the data to really get the value out of it as much as possible. So it's really a number of different things we're doing over the next year to do that.
Another question, how do you differentiate from other grain data providers? Matt or Olivia, feel free to take that one.
I can take this one, Colleen. So our platform offers the most complete, timely, and easy to access tracking of global grains movements. So the coverage is really global and granular, including some hard to track places, such as the Black Sea. And those places usually present some real difficulties in terms of actually obtaining the data. And so if you think of it, our company is really a one-stop shop compared to some other vessel tracking and lineups providers. So we really have a three-pronged approach. We have vessel data, we have user interface, and we have analyst interpretation. And those three really provide the most value-added services to our clients. And in addition, I like to mention that our pricing is also very competitive to some other companies and platforms out there.
Could I add one thing as well, just, and Olivia wouldn't say this, but the great thing with having Olivia on board is that she's so knowledgeable that she can look at the data and question it if there is anything that we're not too sure about. And so she's there on the back end with the knowledge, making sure that it's as good as possible. All that experience she's had over a number of years, she already knows the various different regions. So that is great. And then the second piece of it is the interpretation as well. So she's able to come in and not just look at the data, but also say, this is telling us this about the market, or telling this, or being able to question it. So that's a great asset that we have as well.
Question here, does ClipperData track overseas cash markets other than at ports? In particular, this user is curious about sub-Saharan Africa.
So our data focus primarily at discharges at the ports. In terms of the cash markets, I believe our partnership with Barchart is actually able to enable us to do some of that. So I know Barchart tracks FOB prices globally, which is really not something that we currently track. We focus on the loadings and discharges from the beginning to the end of the voyage. But the prices, they can definitely be obtained via Barchart.
Here. Do you have any plans to cover the metals or also any soft commodities?
Yes, so we have currently coverage of the iron ore. if that counts as metals. We also have, so our dry bulk database actually have extensive covering of all different kinds of smaller metals out there. And so if you're interested, we can definitely do a trial. And other softs such as sugar, coffee, these type of commodities that you may be wondering, we currently don't cover those because some of them are not really loaded onto bulk carriers. So if they are really container based, and if just they're since they're occupying such a small space in the overall dry bulk flows globally, we currently aren't able to cover them very much. But if we have enough interest, it's an area that we'd like to develop more into.
Question here, do you do any predicting work besides vessel tracking?
Mm-hmm. So we're focusing currently on the vessel tracking, but we also do some forecasting work. For example, the one we're currently working on is to really gain an understanding of the grains loadings out of Brazil using ballast and fixtures and lineups data. So that should enable clients to anticipate the loadings ahead of time and really to gain that insight into the global supply and demand ahead of time. And besides, you know, the market commentaries and reports prepared by the analyst will help interpret the market, as Matt had mentioned, and they'll continue to showcase what is the best use of our data.
The questions I saw come through for today. So I just want to thank you both, Olivia and Matt, for joining me. You know, we appreciate the partnership, and you know, we hope to do a lot more things with you guys in the future. If do either of you have anything you want to add before we sign off?
I'm good. I thought Olivia did a great job of explaining everything, and thought you did a great job of guiding us as well. So thank you.
Yeah, no problem.
For any Colleen.
Yeah, of course. For any attendees who have questions or want to learn more about incorporating ClipperData into your own products and services, or to get a free trial into Commodity View, feel free to visit our website, barchart.com/commodity. That's CMDTY. We have a ton of information on there, and you can learn more about ClipperData and the solutions that we offer. So again, thank you, Olivia and Matt, and thank you to all the attendees for joining us today. And we hope everyone has a great day.
Thank you.
Thank you.